Friday video for Monday setup, but I'm going to do something totally different. This is the British pound annual chart, because if one steps back sometimes from the micro 5-minute voodoo chart, then sometimes you see something a little bit different. As an annual chart, each one of these bars began in January, and so as such the British pound is up on last year, having had the recent fairly dramatic fall over the last few days and couple of weeks. It may not feel like that, but I just wanted to put this into perspective, and so as such it's probably worthwhile just seeing where 50% is for this year. I'm specifically going to highlight 55% as being 151. The 38% is just below 157. If we go down to a quarterly chart, and so for the moment this was the first quarter, second quarter, and here we are in the third quarter, which is about to end, we find that we've got a little bit of a reversal going on in the current quarter. And in all probability, we will close this quarter on the dead low, whatever that dead low happens to be. Now you can see the top of the first quarter was down at 153.5. Coming down still further to a monthly degree, we can see that we've gone nowhere in 4 months. Yes, we've gone from 161 to 170, and here we are back below 160, but in essence we have gone nowhere. And then we've got the 10-period moving average on the monthly sitting just about at 157. Coming still down further, the weekly chart. And of course this is the chart that everybody's trying to highlight with the head and shoulders together with the dailies. And we've already discussed this. We've got 1, 2, 3, 4 head, 1, 2, 3, 4. Okay, and so we have to count for equilibrium on the left hand side, and we've got 5 on the left hand side, and we've only got 3 on the right hand side. The only thing that we can say about this chart is that we had the spike, we had the retest of the breakdown, and now we're working our way lower with a series of lower highs and lower lows, closing for the first time below the 20-week moving average for some considerable time. Now, if things are true to this sort of pattern, then by rights what should happen is that we'll go down a little bit further, snap back, come and test some sort of breakdown. Let's go down to the daily degree, and we can see that we've come on the second leg from 167 to 161, about 600 pips, and that would give us a move to 158 type handle. So in an earlier video this week I highlighted 158.43, and I'm going to stick with that. Anything below 158.43 is possibly going to be nosebleed, reverse nosebleed type stuff. However, we are approaching the end of the month and the end of the quarter, and so any form of excess could be substantially lower. The 200-day moving average is down at 154. And if we come down to a 60-minute chart, we find that we've got this double bottom created on Friday at 159.15, and the market has had one attempt at a dead cat bounce. Well, I'm going to use a daily close above 162.21 as stop and reverse against preferred bias of sell rallies. comment about the sterling cross rates, particularly as that is what has been driving the British pound against the dollar. And so here's a line chart, weekly line chart of the euro against the British pound, and if I put a Fibonacci on it from the top to the bottom and draw the trend line, you can see that we broke the trend line roughly at 90.5. Here we are at a 66% retracement. Much more, it becomes nosebleed territory again for a move to 93.40 to retrace 78% of this down move. And of course, by that stage, everybody's going to be talking about 1-for-1 against the pound. It's not going to happen. The absolute maximum, in my opinion, is 98.5, and from 98.5, there's a reasonable chance that we collapse the market all the way back, would you believe, to somewhere around the 75 level. Now, hopefully in some degree we get a scenario where it goes up, stops out some of the shorts, market retraces a little bit, maybe comes back to retest, possibly the as deep as 88, interesting number, and then gets going again. These markets, which are one time frame dimensional and directional with absolutely no pullback, is the result frequently of the robot machines, which once a trend gets into play, they're like one of those sort of Rottweilers who bites, locks on, and doesn't let go until they decide. So it becomes quite difficult in these trending directional markets to do anything but sit and say, so be it, I'm not on board, let's see what happens, as would be the case for many people. The alternative, of course, is that you try and sell it, and the reality is that the short to medium term trend has changed direction back up, and therefore if you want to be in the direction, rather than trying to go with on a momentum trade, because that go with momentum trade has already occurred, you're looking for the pullback to buy into. Now, of course, at the tail end of last week, we found that sterling yen was starting to move. The momentum study is rolling over for a sell signal, and in which case we probably just need to have a look at this and say, well, where are we likely to get down to? And about 136 is probably where this is headed to. So it's possible that there's an element of cross rate shift, that the pound against the euro is shifting its focus against the Japanese yen instead. If that's the case, well, we just have to pay attention to what's happening to the Japanese yen as well as the euro when trading the pound against the dollar.